Josh Jelsing here, PGS Home Loans, talking to Mr. Eric Johnson today about his transition from the direct lending world into the broker world and what his experience has been so far. So thank you so much for joining us, my man. Appreciate you. First question, right out of the gates. Before you came over to the broker world, how long were you working as a direct lender?
I think before I came to the broker world, I was a direct lender for somewhere between 3.5, 4 years.
Okay, so a good amount of time. Mm-hmm. Yeah, awesome. Okay, did you work for a couple different direct lenders? Was it just one?
So I was with 2 different direct lenders.
Cool.
And both operated pretty similar to each other.
Yeah, big national shops.
Yep.
Cool. Okay. Awesome. When you were at the direct lenders, and obviously they do everything they can to retain you, what were some of the things they were telling you about why you should never go to the broker world and why you should stay in the direct lending world?
So this is a really great question, because when you are working as a direct lender, kind of your big sales pitch, or kind of what you're fed a lot of, is when you go to the broker world, you're going to lose control. You're not going to close your loans quick.
Yep.
The level of service that you're going to provide is going to be significantly reduced.
Yeah.
And so that's kind of the mindset that you have, is that you're offering something as a direct lender that you could never offer anywhere else unless you are a direct lender.
Yep.
Which, as we know, is just simply not the case.
Yeah, absolutely. When you were starting the transition, or when you were starting to think about, hey, there might be something to this broker world that I don't understand, were there some other fears outside of what you're receiving from your direct lending, managers and that platform that would have kept you in the direct lending world versus making the jump? Like, just your own thoughts.
Yeah, I think just no matter what, who we are, right? Like, change is always super scary.
Yep.
Especially when we're talking about, yes, you're in the same career field, but moving from a direct lender to the broker world sometimes feels like a career change.
Yeah.
And that was like a lot of what was instilled is, if you move from this direct lending platform over to the broker world, like, your whole world is going to get turned upside down.
Yep.
So once you get over that fear factor and you're willing to take that leap and see what's on the other side, it really is incredible the change that your business can make.
Yeah, absolutely. Did you guys, when you're looking into making that switch and you're really curious about becoming a mortgage broker, how many mortgage brokers did you talk to and interview with? Because I know you guys did your due diligence and really researched, but how many do you think you talked to?
Man, I don't even know the number, but we talked to a lot of people.
Yeah.
A lot of really big name people. Some people flew us out there so we could talk to them. We did a lot of due diligence because we wanted to make sure we really understood the process and what each broker shop offered, especially when we're talking about rates and all the, I'm going to just call it shenanigans that goes on with rate sheets in the back end. And I don't know if we'll get into that more later, but I'm happy to elaborate.
Yeah.
That was what we took like a really deep dive on.
Yep.
And then just making sure that we aligned with, the people that we were talking to, working with. And we didn't have any sort of resentment or anything was going to build up. So we really made sure we did our due diligence throughout the whole process.
Yep, absolutely. It's so important to ask as many questions as possible. I think a big mistake loan officers make is they'll talk to one person and they're like, oh, that sounds great. And they jump on board.
Right.
Versus,
now that's gospel.
Talking to one, let's go talk to 5 more and see where our fit is. I think that's phenomenal. Cool.
I couldn't agree more.
You mentioned earlier about shenanigans with rate sheets. Yeah. Let's talk about that from the direct lending standpoint. I've heard so many times where a loan officer for a direct lender would see that the mortgage-backed security bond market actually improved and rates should get better, but on the direct lending side, they either stayed the same or got worse. Can you speak to that?
Yeah. So, and not to get too much in the weeds on it, right? But the direct lending world is very much, right? It's very much a huge corporation. They have a lot of layers to it, right? And so when we see the market shift and get better, that doesn't always reflect directly on the rate sheet, because if the market did get better, that could mean additional profit margin for whatever direct lender that people are working with.
Yeah, absolutely.
And I think to elaborate on this a little bit more is I've talked to lots and lots of loan officers, older loan officers that have been doing this for 20 or 30 years, and they still don't understand that there is a lot of additional profit that is baked into the rate sheet that they're seeing.
Yeah.
So then when, if we're competing against a direct lender and they're like, oh, I don't know how this broker is 1% better or 2% better. The reality is because all of that profit margin is not in the rate sheet.
Yep.
And that's what they don't actually see.
Yep.
All they're seeing is what's being put in front of them.
Yep.
And there's no way to really research it.
Yep, absolutely. With PGS, all of what you see in the rate sheet is exactly what you get. There's no padding. There's no back-end money coming from any lender on any program, right? If you were to compare a broker rate sheet that's that model versus a direct lending rate sheet, what type of fluctuation could you see on the interest rates for a broker side on a daily, whatever the market's doing that day, whether it's getting worse or getting better? Let's say it's just an average day. How much fluctuation in price improvement or price worsening would you see on the broker side?
I think depending on the amount of fluctuation, we're talking the difference between what we would see at retail to what we would see in the broker world.
Yeah, exactly.
Rate sheet.
Yep.
I think that when the market is like it is right now, retail is running super thin.
Yeah.
Right? They are. They're being lean.
Yep.
As they need to, right?
Yep.
Because
they got to keep the doors open.
And to quote a lot of retail banks, sometimes it becomes a war of attrition.
Yep.
Right.
Absolutely.
And so they're getting pretty skinny on their margins to where the disparity between us and them is significantly less than it used to be.
Yeah.
But don't kid yourself. There's still a huge disparity.
Yep.
Right. So right now, I'd say depending on the price exception, the loan officer could get approved at direct lending versus just us saying, hey, this is what we can offer. Anywhere between 0.5% to 1% or more, depending on the margin that is being baked in on the direct lending side.
Yeah, totally.
So, it's huge difference.
It really is. It really is. The direct lending world. Describe all the things that a direct lender has to pay for, office-wise, admin-wise, that a mortgage broker doesn't have to, which is why we can have such better pricing.
Yeah, the list is, a mile long. We could fill up a legal pad full of things that they need to pay for, right?
Yep.
And I'm not even just talking office supplies and this and that.
Yeah.
I'm talking managers, compliance managers, W-2'd employees that really, really just crush a P&L.
Crush. Right.
People don't realize
Right.
how much it costs to have a W-2 employee.
Yeah. Health insurance, 401k.
All of it.
Yep.
All of it.
Yeah.
And then when you start looking at all of these things, right? Well, who is paying for all of these things? How can the company say, hey, Josh, you know what? We're going to offer you a 5% 401k match.
Yep.
Who's paying for it?
100%.
Right? The client is.
100%.
That's just the reality.
Yeah.
So,
and not only that, too, not to cut you off, but big, beautiful office buildings.
Yeah.
Right?
Yeah.
District managers, regional managers, a direct manager, lock desks, disclosure departments, all of these things, it costs money. And a lot of these banks, I'm sure the majority of these banks are running at losses, or the majority of the branches are running at losses, because you're back to your point about the war of attrition. It really is just trying to get to the part where rates drop, refis can start coming in, they're profitable again, and they survive to fight another day.
Right. And to just go into a little more detail on that, I think, I always used to refer to them as empty suit pockets, right? To where there can be these people sometimes to where it's, and a lot of them are really great people.
Yeah.
So I don't ever want to take that away.
And very talented loan officers that work there too.
Absolutely.
Right.
But I think what gets missed so often is how many people are not producing loans.
Yeah.
Just to get down to a really raw level, if you are not producing loans, you are an expense.
Right.
In the way the market is, probably an unnecessary expense.
Right.
So it's a huge thing to consider that I think a lot of people don't realize, that vice president that's driving around in his Bentley, right? Where did that come from?
100%. Yeah. Cool. What's the biggest benefit you've realized since becoming a mortgage broker?
That's a tough question.
It could be twofold, threefold.
So I'm going to say the amount of control that we have.
Yeah.
Right. And I think the reason I'm going to say that's as my number one.
Yeah.
Is because I always thought I would lose control when I became a broker.
Yeah.
Right. I thought my control was going to be out the window, and I was so nervous about that. I told you a lot of times, I was so nervous about that.
Yeah.
And then when I got here and I realized I can control everything. I can literally do whatever I want. I can structure the file however I want. Like the different ways of compensation that are out there that they tell us, oh, that's not legal in retail.
Yeah.
Right? Like, this is the way you have to be compensated.
Yeah.
Where as a broker, like, there is a ton of different ways you can be compensated, and it's not a RESPA violation,
Right.
but it is beat into some people's heads so hard that
100%.
this is the only way you can be compensated. So I will say control, having a ton more of it, flexibility in that control, and then having flexibility with your compensation if you need to be extremely competitive.
Yeah, absolutely. I think those are huge as well. In the broker world, coming from the direct lending world to the broker world, have you found any limitations in the amount of loan programs that you can offer? Did you have more in your tool belt as a direct lender than you did as a mortgage broker? Can you expand on that?
Yeah, this almost makes me laugh out loud. And I'm going to reference just this year alone, and what are we, halfway through the year roughly, right? I mean, a lot of the loans that we're doing are super unconventional loans.
Yeah.
Right? Like DSCRs, bank statements, all of these things that, like, yeah, maybe we hear about it at retail and you could broker it out, but it's just not the same.
Yeah.
Right? Like, when I can look up 12 different banks that offer a bank statement loan or, HE loans, HELOCs. I mean, all of these things, unique properties. I have a unique property loan going right now.
Yeah.
Right? Like,
Yeah.
having access to all of those banks,
Yep.
like, and to just go a little bit more on it, it's a $2 million purchase price on a unique property.
Totally.
Like, what would I be missing out on just because for the longest time I thought in my head, oh, there's not a product out there for this guy, but there is a product out there. So, I mean, not to sound cheesy, but it almost makes me laugh out loud because the knowledge base and the loan products that I've accumulated since I've been in the broker world is out of control.
100%.
And the level of confidence that you have when you talk to somebody as a broker, it's almost like, hey, what's your scenario? I bet I can find somebody for you, Josh. Like, what is it? Oh, you're self-employed? Okay. You only have 12 months of bank statements that show income?
Yep.
All right. Tell me more.
Right.
Right? Like, it's almost like you have the ability to ask way more in-depth questions because there's a product out there. You just got to go find it.
And not only is there a product out there, but there's also, okay, we've got 82 different banks, and let's say 55 of them offer bank statement loans.
Yeah.
Well, you're going to find the rock bottom best rate for that bank statement loan or a P&L loan or reverse mortgages or HELOCs, HE-loans. I mean, I've counted our niche loan flyers this morning, and there was 64. And that was just the ones that we started creating. Yeah. So it even goes beyond that. So it's the amount of loan programs, and then the fact that you can offer the best rates for each one of those programs is so huge.
Right.
Yeah. Obviously, we're biased. We think being a mortgage broker is great, right? But every platform is going to have a weakness. Whether you're a big box bank, a direct lender, a credit union, whatever. What are some of the weaknesses that you've found for being a mortgage broker?
I will say, the first retail bank that I was at, and I'll say this is probably the only real weakness I've identified in the broker world, is the ability to get an exception made on something that normally wouldn't get made.
Yeah.
Right. And to elaborate on that a little bit more, when you're at a retail bank, right, and like they have a ton of that margin built in, right? Maybe they're saying, hey, you know what? I'm willing to take the risk on this. We'll fund this loan. Right. Like, we'll fund this loan. And then we'll service this loan.
Exactly. They'll service the loan. Right.
That's really the only real weakness. But just to kind of touch on it a bit more, while it is definitely a weakness in the broker world, there are exceptions to be made. And like you said, with 80 plus banks, just because this bank won't do it, there's another bank out there that will make an exception for it. It's just how hungry are you to go out there and hunt?
Yeah, 100%. Right? To that comment, it's amazing the interpretation of guidelines. Once you start realizing that it comes down to how banks interpret the guidelines, then it's, oh, wow, there really is a big difference, because you could have 7 banks telling you, no, you can't do this. Right. And then 2 banks say, no, that's not how we interpret that guideline. And this is a straight Fannie Freddie, Govy guideline. Oh, yeah. And they'll come back and they'll say, yep, we can.
Right.
I can't tell you how many deals I've closed just because of that alone.
Oh, absolutely.
Yeah.
Just having the resources to go out there and explore more instead of being put in this tiny box.
Yep.
To where, whatever you can find in that one tool chest is all you have to work with.
Yeah.
Now you have the ability to call up all of these different banks, right?
Yep.
And something else I think is really cool is the people at the other end of the bank, when you talk to them, like, if you're an account executive at Pick a Bank,
Yeah.
and I call you up, you want that loan.
Totally.
You want that business.
Right.
So you're going to try to figure out, hey, you know what? Like, I can make this work. Or you just tell me straight up, no, this loan's not for us.
Yeah.
So
100%. Cool.
right on.
Thanks, my man. Appreciate you.